It's the question that's echoing across crypto circles. Discord servers and Telegram groups is now the time to bet on small-cap altcoins. While Bitcoin and Ethereum remain the undisputed titans of the crypto landscape anchoring the market, with a combined dominance that's steering the industry toward a $4 trillion valuation, there's a quiet undercurrent building beneath the surface. Capital and curiosity are beginning to trickle into lower-cap altcoins, and for those who know how to spot the signals, this phase could mark the beginning of something far bigger. But let's be clear from the start, this is not a one-way street to easy gains. The road is as volatile as it is potentially lucrative, so understanding both sides of the equation, the explosive opportunities and the destructive risks, is the only way to navigate what comes next, right now. We're witnessing a subtle but notable shift in capital allocation. The big money, which first surged into Bitcoin, has gradually rotated toward Ethereum, and as Mr. Crypto observed, we may now be entering phase 2 of the growth cycle. Capital begins seeking asymmetric returns in smaller altcoins. Historically, this is where fortunes are made, not in the safe, already discovered giants, but in the speculative corners of the market that mainstream investors haven't caught up to yet. If this pattern holds, we could be on the cusp of a broad altcoin breakout. Small-cap tokens, with lower market capitalizations and thinner liquidity, tend to react with outsized moves when demand spikes, even marginally. But what makes this cycle particularly interesting is the data behind investor behavior. While optimism for a full-blown altcoin season is gaining traction in sentiment trackers and social trends, actual market flow paints a more cautious picture at present. Altcoins outside the top 100 cumulatively hold just $15.4 billion in market cap, a microscopic slice of the total crypto pie that's not just a statistic, it's a reflection of current investor caution. Most of the liquidity is still sitting in blue-chip tokens, and that signals that institutional capital is hesitant to dive deep into higher-risk plays at least for now. This divergence between optimism and behavior creates a fascinating tension. On one hand, it suggests a window of opportunity for early positioning. Historically, small-cap altcoins have outperformed when investors shift from risk-off to risk-on mindsets, chasing yield and speculative assets. If we are indeed early in that pivot, the next phase could unlock exponential gains. But on the other hand, this early stage positioning comes with enormous risk, particularly when derivatives enter the equation. Analyst João was quick to highlight a glaring red flag: open interest in many of these micro-cap altcoins is unusually high relative to their market capitalization. This signals that most of the capital flooding in is not from long-term believers or spot buyers. It's from leveraged speculators in the derivatives market. And we've seen how this ends before, in environments where real demand is thin, but leverage is thick. Price moves become unstable. A sudden drop doesn't just hurt. It triggers cascading liquidations that wipe out positions in minutes. These aren't markets for the faint-hearted. They're pressure cookers of greed and fear, where one misstep can mean a complete portfolio wipeout. But let's return to the opportunity side, because there's a reason people are still drawn to these plays. Despite the danger small cap, altcoins offer something no blue-chip asset can match: multiples. We're not talking about 2x or 3x gains over a year in the right conditions. A microcap coin with strong fundamentals or a compelling narrative can spike 10x, 20x, even 50x within a few months. That's not hyperbole. It's a historical fact that's been repeated in every bull cycle. But this is crucial. Those kinds of gains only happen under specific conditions. You need surging retail sentiment, narrative tailwinds like gaming, AI, or meme culture, and most importantly, liquidity inflows. Without those, even the most promising altcoin becomes a ghost town. Timing, therefore, is everything. In Q3 2025 sits at a crossroads. On one hand, we have macro-level bullish signals. Bitcoin dominance is flattening. Ethereum is holding strong, and the broader market cap is inching toward new all-time highs. These are classic indicators of a maturing bull cycle if the historical pattern repeats. The next rotation is into mid-caps and then small caps. That means early movers could be rewarded massively, but only if they're not too early. Because being early in crypto isn't the same as being right if retail hasn't arrived yet. Small cap coins can remain flat or even decline. Despite strong narratives or community hype, there's also the psychological aspect to consider. Most retail investors are still scarred from previous crashes. They're moving cautiously. Many of them are just now returning to crypto after a long bear market. This creates a lag effect, where sentiment trails price action by the time retail fully embraces small-cap altcoins. The early gains will already have been made. That's why experienced investors are beginning to scan the field now, not because it's guaranteed to explode tomorrow, but because when it does move, it will move too fast to catch if you're on the sidelines still. Caution must be the default mindset. Most small-cap altcoins are not projects, they're products of narrative engineering. Driven more by memes than mechanisms, even among tokens with real tech or teams. The competition is brutal and attention spans are short for every altcoin that goes 40x. There are hundreds that go to zero. The key is not just identifying potential winners, but managing exposure with strict discipline. Diversification, position sizing, and stop-loss strategies aren't optional. They're survival tactics. Another emerging trend to watch is the shift in social energy, as we've seen time and again. Crypto doesn't follow traditional valuation models, it follows attention right now. Attention is slowly shifting to the periphery. Meme coins like Pepe, gaming tokens, and AI-related altcoins are beginning to dominate conversation threads. This doesn't mean they're good investments in the long run, but it does mean they could see short-term explosions in price driven by hype and FOMO if you know how to ride those waves, and just as importantly, when to get off. You can turn short-term sentiment into substantial profits. Ultimately, the answer to whether it's time to bet on small-cap altcoins is nuanced if you're an investor with high risk tolerance, deep understanding of market cycles, and the discipline to manage volatility. This could be your moment, but if you're chasing quick riches without a strategy, it could be your undoing. The game is asymmetric. The rewards are disproportionate, but so are the losses. In conclusion, small-cap altcoins in Q3 2025 represent both a golden opportunity and a potential landmine. The conditions are aligning for a speculative rally, but not all the ingredients are in place yet. Smart capital is beginning to position itself, but the mass market has not arrived. That means now is the time to prepare. Study, build watch lists, and enter positions slowly, not recklessly, because when the next wave of liquidity hits, it won't be gentle. It will be a tidal surge, and the only question is whether you'll be riding it or drowning in it.